Hi, Epstein with your morning flash update, and this update is for the morning. As we're here now on Thursday, the 18th of January, 2024, 8:20 a.m. Central Time. A lot of information. The wars in the Mideast continue on. Israel continues its strikes, but we saw Pakistan retaliated against Iran's strike against it. They did that today, and they went in and did a tit for tat. We saw that the coalition, the United States, its partners, but basically the U.S., went in and hit a number of missile sites in Yemen. And that's preemptive, as they saw these missiles ready to go out again to sea. And as usual, the Houthis are saying, won't matter what you do. We'll just keep upping our game, and we'll keep shutting off all the oil that's going through there. And that is creating a problem, giving oil something of a bid right here. Another big storm coming in off the northwest. It's got people concerned about what's going on here, but warmer weather is coming, and that's part of why natural gas is down a little bit. We'll be in a great part of the U.S. We're going to get a break next week, and we'll see temperatures starting to go back up, something more near normal than these freezing parts that we've had. Now, there's a lot of news out, but I want to start off with one piece of news that ends today. And this is my 30 days of market research for basically the price of a cup of coffee. And remember, that coffee's out of your system in 6 to 8 hours maximum. Not this. This is going to be with you 30 days at least. I went out and I priced a cup of coffee in my zip code in Chicago, and with taxes, $4.08 for Starbucks. Pete's, the large cup, was $4.13. Dunkin' Donuts, $3.56. You throw in a tip, and you're around $4.5 minimum, depending on how nice of a tipper you are, right? All right, that's minimum. You might be $5, depending on what you want to do. I'm offering my morning futures. This is 22 videos. Basically, out of 30 days in a month, you have 22 business days, and it's basically one each business day. And then on the weekend, a weekly video using weekly charts for the longer-term picture, $3.98, half price of my regular introductory offer. And for the Spider ETF, instead of $8.95, $4.48. I mean, come on, these are great low prices. It ends today at midnight. So Central Time, Chicago, over. You're not going to see this again. Take advantage of it. By the way, when you do subscribe, what happens is you get your member login on our website. You can adjust your subscription. You can cancel it. It doesn't have to roll over. It can roll over. You can add things to it. Away you go. Let's assume that you're a current morning subscriber. Don't cancel your subscription and think that I'll honor the new low price. I won't. Same on the Spider. But let's assume you have one of these two already and you want to get the other one. What a great time to take a look-see at it, and I think you'll find it worth it. You can go to iraepstein.com under the word research. You can move your cursor to the top here. There'll be a link that takes you there as well. All right, so let's go and now take a look at the morning data, because it's important. Housing starts, we expected them lower, and they came in lower, down 4.3% to 1.46, but that's not as bad as the market looked at. They were looking for a drop of 8%. They only got half of that. That's strength. Then when we take a look at building permits, they were looking for it up 1.4%. They got 1.9. So the housing market is like a beast laying in the woods, waiting for the weather to break, people to come out. Soon as the warmer weather's on the horizon, end of February, this market should be picking up pretty good. We get to the Philly Fed business activity. They were expecting it down 7. It's worse. And what did I tell you? I'm telling you, manufacturing is what's hurting in the United States. I've said it each night in my reviews and so on. I continue to see it. The prices paid were up, not as much as they were in the past. The employment index down, but not as much as in the past. We then look at new orders still slipping, so a little slowdown that we're seeing there. The shipment index was down, but not as much as in the past. But inventories coming away. So we're biting off the inventories, not producing as much. Then you get to the jobless claims, and I'm telling you, I don't understand why people are looking for a March rate cut. I've said this over and over, until you see employment wobble. You're not getting a wobble. If it's doing anything, it's gotten stronger. You're down to 16,000 less new claims at 187. I don't remember the number down there. I'm going to go do my research, but it's been a while since we're that low. And the continuing claims, instead of it going up, they're slipping too. The jobs market is strong. We're going to get at the end of actually at 10 o'clock this morning, the EIA number on stocks of oil. And now we're looking at energy analysts looking at the EIA natural gas report, and they're looking for a big withdrawal as we've had all this terrible cold weather. So you put this together and you try to come up with a game plan for what the markets are doing. I'm of the opinion, and when I looked just before showtime here, I wanted to see what the probabilities on the CME FedWatch page. They're down to 50% now for March. So all that euphoria that was in there, it's basically now flip a coin. Will the Fed raise rates or not? To me, it's not even a coin flip. To me, if the data stays just as it is and we don't see improvement before the March meeting, and that's a long way off. Let's face it, that's what, 7 or 8 weeks. Why would the Fed cut rates? Making it worse, if it stays like this through February, you don't have to wait for March. The Fed will say, you know something, we'd like to get a couple of months where we're certain of what's going. We don't find that we cut rates and then we have to raise them. They're not going to play that game. That was the old Volcker game, and Alan Greenspan played with games like that too. So you don't want to be in that at all. Not at all. You want to, when you make your move, you make it. Now we're seeing Miss Lagarde has come out, and she's saying she doesn't envision a move by the European Central Bank before June. So you put this together, and this euphoria we saw at the beginning of the year weighing on it. What does it mean for stocks, though? Do you buy them right here? You know, you haven't given back anything, basically. I showed it in this morning's video in futures. On this rally from October 27th, roughly, to December 25th to 27th, you haven't given back, what, a small percentage? I mean, a small percentage? Got to be careful there. Why isn't gold responding more to what's going on in the Mideast is another question you want to take up. As for the dollar, can it make it to that 104 level? That's going to be a question that a lot of us ask. In Bitcoin, what's been going on is people are swapping money around. You know, I saw Kathy Woods took money out of one of her, where she was keeping money in Bitcoin, one of her trusts, and moved it into her fund. That's not new buying as far as I'm concerned. You're just swapping money around. Let's see where the new money comes in. People keep saying it's going to happen. Well, now that you got the platforms, we'll start measuring that. In the grain markets, most of them still lower. A lot of selling pressure still on these markets. Big crops make bigger crops. You got to keep your eye on the El Nino event, though, that's hitting Argentina and Brazil. Very important. It might be beneficial in Argentina and actually do damage in Brazil. Things you want to look at. I covered that last night in my written report. So I'll catch up with you all at the end of the day in our market reviews. I wish I could give you more encouragement. I just see markets waffling right here more than I see them trying to trend. You have a great morning.